Factory activity slowed in March. During the month, output fell 6.4% year-on-year. This was led by a decline in motor vehicle manufacturing and is a steep fall from a 4% increase in production the month before. South Africa's elections will be a key event and will have a substantial impact on the economy, either positively or negatively based on the outcome. That's according to Carl Group. The agriculture-focused firm highlighted this in the group's interim results. During the period, it says that it had to contend with poor economic conditions and subdued growth, but less load shedding allowed for some reprieve for both business and consumers. Headline earnings per share rose 7.3%. Carl attributes this to increased distribution center throughput, fuel price gains realized, a larger contribution of convenience retail as well as higher rebates received. An interim dividend of 54 cents per share has been declared. That's an increase of 8%. Sappi has had a tougher second quarter. The pulp and paper producer has posted a 6% decline in sales for the period, and when viewed for the half-year, sales were 15% lower. This impacted earnings. Interim earnings per share fell 51%. That's as underlying market conditions remain subdued due to the challenging macroeconomic environment. Looking ahead, the group stated that the third quarter is seasonally the weakest in terms of demand for its products, but says it's well positioned with healthy cash reserves and liquidity to manage current market uncertainties. Lesaka Technologies has reduced its net loss in the third quarter. That has revenue increased by 9% in rand terms, largely boosted by gains at its consumer division. The firm has maintained its revenue guidance for the full year between 10.7 and 11.7 billion rand, but has raised its forecast for adjusted earnings before interest, tax, depreciation and amortization to between 685 and 705 million rand. That's from previously guided 625 and 685 million rand. RFG is expecting a profit bump during the group's first half. The food producer says headline earnings per share could be between 18 and 23% higher. It also flagged that operating profit margins strengthened during the period due to improved factory efficiencies, capital investment at the Tulbagh fruit products factory, as well as the weakening of the rand against RFG's basket of trading currencies. Full details will be available when the company opens its books on the 22nd of May. Pan-African Resources is confident of meeting the upper end of its full-year production guidance. The gold producer expects output of between 186 and 190,000 ounces. That's even as it ceased processing of marginal surface sources at Evander due to this business becoming uneconomical. CEO Kobus Loot says the robust production results combined with record rand gold prices should see the group deliver an excellent financial performance for the year. Alongside this commentary, Pan-African also provided an update on its Mogale tailings retreatment project. It says the venture remains on schedule for commissioning and steady state production in December. The company also doesn't expect any expenditure overruns for the project. Nampak has delayed the release of its interim results. That's due to a cyber incident in March which affected the packaging supplier's IT systems. Historically, Nampak has released its half-year results in the last week of May, but it's now planning to open its books on the 28th of June. The delay allows the firm time to ensure that all financial information is complete and accurate. On the international front, according to a report, Huawei's latest high-end phone features more Chinese suppliers, including a new flash memory storage chip and an improved chip processor, further pointing to the progress China is making towards technology self-sufficiency. Here's more detail in this package report.
An exclusive report for Reuters has found Huawei's latest high-end phone features more Chinese suppliers than ever before. This includes a new flash memory storage chip and an improved processor, highlighting the progress China is making towards technological self-sufficiency. Online tech repair company iFixit and consultancy Tech Search International scrutinized the inside of Huawei's Pura 70 Pro on behalf of Reuters. They found parts including a memory chip they said was likely packaged by the Chinese giant's in-house chip unit HiSilicon. These findings have not previously been reported, and Huawei declined to comment. Some memory chips for earlier models had been made by South Korea's SK Hynix. Now, Huawei's resurgence in the high-end smartphone market after 4 years of US sanctions is being watched closely, as it has become a symbol of US-China trade tensions. Huawei launched the Pura 70's 4 smartphone models in April, and they quickly sold out. Analysts say it will likely take more market share from iPhone maker Apple, leaving Washington to question the efficacy of its curbs on the Chinese telecoms equipment giant.
And China's exports and imports returned to growth in April after contracting in the previous month, signaling and encouraging improvement in demand at home and overseas as Beijing navigates numerous challenges in an effort to shore up a shaky economy. Let's take a look at this package report for more.
China's imports and exports returns to growth in April after contracting the previous month. It signals an encouraging upturn in domestic and overseas demand as Beijing tries to shore up a shaky economy. The data suggests a slew of support measures may have helped to stabilise both investor and consumer confidence. But analysts remain sceptical about the sustainability of this trade bounce. Shipments from China grew 1.5% year-on-year last month by value, in line with expectations, having fallen 7.5% in March, the first contraction since November. Imports for April increased a forecast-beating 8.4%, reversing a 1.9% fall in March. As the first quarter of the year saw imports and exports rise year-on-year, those weak March figures had led to concerns momentum could be faltering again. Most commentators say Beijing has a tough job to improve confidence. Consumer inflation, producer prices and bank lending for March showed the world's number 2 economy has vulnerabilities. Alongside this, a protracted property crisis remains a drag on overall confidence, spurring calls for more policy stimulus. Beijing has set an economic growth target for 2024 of around 5%, which many analysts say will be a challenge to achieve without much more stimulus.